Hello everyone, I'm John Cunnison. I'm the Chief Investment Officer at Baker Boyer Bank. I want to welcome you all to our monthly market update. And I want to talk about three things today. One is just some recent volatility in markets and some market and economic events that have occurred. I want to talk a little bit about the past 5 years and just some extraordinary events that have occurred and what that's meant for market returns. And lastly, I want to talk a little bit about the next 5 years and what we can expect and what we think will be the key to investment success. So as we look at recent market events, I think it's important to note that we've seen some volatility, especially the last couple of months. In April and May, we saw really pretty poor returns in April. The stock market sold off, the bond market didn't do as well, and in May, we recovered all of that. And should we be worried when we see the market, bouncing around like that? Is there something wrong that we should be aware of? And the answer is no. This is the sign of a very healthy market, right? This is what markets do. Markets go up, markets go down, and they do that as they're incorporating new information into market prices. So that's the sign of a very healthy market. And what did we see in April? Well, in April, we saw data from March about the labor market and about inflation that indicated to markets, right, that the Federal Reserve may have to keep interest rates higher for longer. Right? Labor markets were very strong. We generated a lot of jobs, and inflation didn't come down. It stayed flat where it was. Right? So that indicated that we may see interest rates held higher, which means higher borrowing costs for consumers and for businesses. Right? It means that higher likelihood that we may see some economic contraction, maybe a recession. Now, as we went forward just 1 month, we saw data that went the other direction. We saw a weakness in the labor market, still positive job growth, but it was lower than people expected. And we saw inflation come down about 0.3%, right? And so that was the data that we saw for April. So in May, markets rallied. They rallied on the news that we might actually see the Federal Reserve decrease interest rates. And so again, all of this is normal and natural for markets. This is a healthy market, doing what markets do and incorporating in that new information. Now I want to turn our attention to the last 5-year period, which I think is just absolutely extraordinary. So if we were to transport you back to 2019, and I were to tell you in 2019 that you were about to experience a global pandemic, and as a result of quarantining at home for that global pandemic, the US economy alone would lose 8 million jobs. Now think about the number 8 million. Right? A healthy economy produces, generally speaking, or creates about 100,000 to 200,000 jobs a month. So losing 8 million jobs, that's an enormous amount of progress that's lost in a very short period of time. Then we saw governments and central banks pulling out all the stops to infuse cash into the economy to rescue, or prevent what could have been a very severe economic crisis. As a result of that cash infusion, we saw inflation that went above 9% in the US, higher in other places. And we saw the federal or central banks around the world increase interest rates at a pace we haven't seen in a long, long time. They went from 0 to over 5% very rapidly. As a result of that, we saw the worst bond market in over a century. Now, as I list these horrible of horribles, let's go back to you sitting there in 2019 and me telling you all of this. What might you have thought you would do with your investments prior to that 5-year period? Well, any sane person would probably say, well, I'm going to go to cash. Right? And you would have missed out on what was a very good return to a balanced portfolio, right? Between 5 and 6% over that time period, which is, of course, sufficient to make all the sort of the hopes and dreams that we have for what our portfolio might achieve for us and our families possible. So as we look forward to the next 5 years, let's just remember that ourselves in 2019, right? And let's hope for that person that they'll have discipline for the next 5 years. Right? A big part of what Baker Boyer does is to look at markets, to make adjustments where they're necessary. But in addition to all of that, we're here as a touchstone for you to maintain your discipline. So investing is emotional. It's emotional for a reason, right? There's a lot at stake in those hard-earned savings that you've accumulated over time. We want to help you grow those savings over time. And the key to that, of course, is discipline. So if you have questions, reach out. We're here to help. Thank you for joining me for this month's market update, and we'll see you next month.